Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is August 19th. I've got Luke Wells here today for a Hog podcast. How's it going?
It's going pretty well, Mike. How are you doing today?
Oh, we're doing pretty good. A few things I wanted to start off with, just some of the outside markets, talk about the grains a little bit, and then work our way into some high-level hog talk. How's that sound?
Sounds like a winner.
All right. Well, the grain market's been ripping lately. A few different things to talk about. Pro farmer crop tours going on as we speak. They've been finding some pretty poor yields out and about. We've had some pretty erratic weather through the Corn Belt as well. High, heavy winds, rains, flooding, things like that for Illinois, Indiana, some of the more important key crop areas throughout the United States, eastern Iowa included. So some of the better parts of the U.S. are starting to go down a little bit. Where we sit, honestly, our crop's probably improving a little bit. Just a few rains here and there, trying to save what is left in some of these areas to try to save at least. So the grain markets have been rallying. Big part of that as well has been led on the back of crude oil. Crude oil's been rallying up into the mid-80s again. Soybean oil's been rallying right alongside of that. So the soybean market, that's rallied right along with that.
Sure.
Same with the soybean meal as well. So it's quite a bit of strength in these grain markets. The wheat market's been giving corn quite a bit of support as well. I'd like to think that corn has just been following basically soybeans and wheat with that rally that we've been seeing. Today there was some extra stuff going on there. Today was a little bit different because if you actually look at a U.S. dollar chart, we had a massive sell-off in the U.S. dollar. The bonds shot up there. Pretty weak bond market there lately. Saw some aggressive buying occur there. A few different things kind of going on. Gold skyrocketed as well. So there was some money flow just flowing into ag commodities here today as well, I think, because of some of those outside market activities that we saw, Luke.
For sure.
What about the hog market? Been a rough go. We've had some bright moments here or there, but the story continues to be about the same, doesn't it?
Yeah, it does. And I mean, some of the factors, I mean, I'm going to, we're in a demand, we have demand challenges right now, without a doubt. And we've been talking about this and it's persisting. We just, as we've went through the summer, this is just inflation affected consumer. I mean, the U.S.-Iran conflict, you mentioned crude's rallying, right? It doesn't appear, that story that, in fact, everything I've read, Iran is kind of cranking up their escalation, if you will. And from a production standpoint, I think we're on the 5th or 6th week of reduced year-over-year slaughter, 3% less. Like this mythical unicorn we've been looking for all year. We're in a production hole, and our price is not moving higher. It's not responding. So it definitely has futures in what we'd say a very negative connotation. I mean, we've sold off this week. We made some contract lows in several contracts. We've moved our forward 12-month margins down to maybe even have a slight negative number in them. So we're in a tough spot. So I wanted to keep this, super high level today because, I just kind of basis a lot of questions that our clients have had, kind of our views. And so we absolutely, 26, 25. I mean, those were good years in the pork industry, right? And you've seen that responded in the global market, specifically, in China, Brazil. I mean, some of the key import, China, key exports like Brazil. Like we global pork supply is pressuring the market. There's more global pork. That's a headwind. I think that headwind kind of perceives in 2027. The consumer is off. The consumer stung, right? U.S. sow base, I don't think we've shrunk it and maybe slightly added, but relatively domestic supply is stable, I would argue, but there's been capital reinvested. We're moving some sows out of some high dense spots. We're filtering facilities. We're turning some herds. What will health look like year over year? We will see. It was really bad this year, but maybe I don't think we see worse productivity year over year. So 27, that's like the macro point. 27 is going to be a tougher year. I think we're going to just reinforce why we have to manage margins. You look at probably without a doubt, the best value on the board today would be next summer's. Like the June D spread, it's around $21, right? It's not 18 would be a normal spread. Just there's more premium out in the deferred. That's where we see. That's where we see maybe some more headwinds coming at us from our office. Near term, obviously, the nearby contracts, October, December, February, April. They're in a tough shape. We've mentioned chicken, lots of chicken at the consumer, a lot of chicken to the poor customers, not right. Mm-hmm. So now, with that said, I'm going to take it a step in and out. We definitely have some demand funk. We shouldn't have lower supply and lower price, right? That's not aligned. But we don't feel in this office and as this team, we don't think that the cycle, the protein demand, it's like broke. Okay. Mm-hmm. We absolutely have a consumer that's got is beat up. We've obviously got a lot of cheap chicken on it, kind of competing against us here. With that said, and this is where we could be wrong. Maybe the consumer's in worse shape than we're willing to acknowledge today. But I'm going to kind of make a bold statement here, and we feel like October, December, February, April, they're over discounted, right? And so, we like to take a step back there. This is why we hedge. We got lots of good coverage in these periods. But we like moving in. We like starting to step in, and, on the front month here, October. And again, it's team and time, like $11 would be the 3-year average basis from where index to October drops today. We're like we're a 15 today, right? So we think the front of the curve's plenty beat up. And so we like to take advantage and bank some equity, lift on some of our futures there, reposition. Some of the deferred contracts we've put on, April, for example. We've got some nice equity in a lot of positions there. LRPs, we got a lot of LRP lineups coming around. It's a good opportunity to bank some equity, reposition, right? Open up some top side on your position. And so kind of like a bull spread the market, if you will, right? And we're wanting to adjust up front, lean on the coverage. We're not wanting to add sales in here. Let's let this market breathe a little bit. Let's see if we can stabilize. We can find some value back in this pork chain, okay? Now, if we're wrong, if futures is right and we're wrong, it's like I said, because this consumer is beat up worse than we are acknowledging today, right? That's where I came back. I talked about the June spread. I talked about next summer futures, even where they're selling off, are showing raises year over year, right? Mm-hmm. We like going out further into 27. I mentioned 27 have to be more defensive than 26. Let's put some floors on out there. I mentioned the bull spread the market, right? Let's cover some good equity and positions we have today, but let's keep extending that coverage on. And, we do have some nice seasonals the end of September. Basically, everybody knows the cutout's going to fall some degree as we get past Labor Day. We have bigger 2-5 runs. We have Saturdays, right? It's about rate of descent. If it doesn't fall as hard as the future's indicating, which a lot of times it doesn't, we can get a nice little rally. We have, a nice Thanksgiving rally. We have a nice first of the year rally, if you will, right? So we are wanting to hold up front. We're wanting to reposition. We think we're a little oversold. We think we can catch up and find some support here. And so we're holding some optimism from these markets. Obviously the trend has been down. Sell pressure has been hard. We do have some barriers stacked up against us here, Mike, but optimism up front. But just acknowledge in the bigger picture, we've got more headwinds against us. Clearly, right? So, if staying disciplined in that risk plan, protecting yourself further out, putting floors in, giving yourself opportunity to position around that, just stay focused in that aspect, Mike. So, it's been hard, to obviously continue to see this market move lower, but we think we're in a low oversold condition here, Mike. That would definitely be our thoughts here today.
Well, hopefully we can find ways to manage that oversold condition, kind of like where we're sitting at, and prep for maybe a somewhat optimistic Q4 here compared to what we're currently seeing.
I think we've got some opportunity, and let's I think we're in a little reset, refreshing kind of time frame here. But stay after it, and let's look forward to seeing some some better markets here in the weeks and months to come.
All right. Well, thank you for your time today, Luke. Please click the link on the description below to access our daily market commentary and other cool market research. Thank you for your time, Luke. I appreciate it.
Thanks, Mike.